So on Friday, we had a significant event occur in the currency markets. We've signaled another failed daily cycle in the dollar. You can see here the dollar has broken below this last daily cycle low back here in July. This is signaling another left translated cycle. We've got a top here on day 10. It's still very early in this daily cycle. We're only on day 17, and lately the daily cycles have been averaging between 35 and 50 days in the currencies. So still potentially a lot of days left before this daily cycle would be due to bottom. So let me widen the chart out here and now I'll show you what the risk is. With this daily cycle only being on day 17 and the normal timing band being between 35 and 50 days, the odds are now strong that we're going to break this 2016 low during this daily cycle. And my feeling now is that we're probably not going to get the final yearly cycle low in the dollar until the debt ceiling is raised, and that's they're going to push it to the last minute like they always do. Politicians will try and get as many perks and concessions against from the opposition as possible before they give their vote to raise the debt ceiling. So they'll push it to the last minute, mid October. And so my feeling is that the dollar cycle probably is not going to bottom until we get past that debt ceiling. So we may have one more daily cycle down, another bounce, and then another daily cycle after that yet before the dollar completes its yearly cycle low. And one characteristic of a bear market is that the yearly cycle low tends to occur late in the year. And so if we we're already in trouble now with this lower low occurring at the end of August. So if we get our yearly cycle low in October and we break this 2016 low, there's really no more confirmations left. We've started a new bear market in the dollar. That would mean that this 3-year cycle is now left translated. Again, another confirmation that a bear market has started. And I'll point out here that the once this support zone is broken, there just really isn't much support between here and the 2014 yearly cycle low down here. The market just kind of went straight up when it was rallying, and there's now a risk that if this final support zone gets broken, that the thing just goes down the same way it went up in a straight line. So we could mirror on the way down the way that it went up on this side. So one particular analyst has been looking for a slingshot. Everybody gets on the wrong side of the market, and but I think he has the pattern right, but I think he has the currency wrong. I think the slingshot is in the euro, not in the dollar. And I think actually, let me convert this over to the euro. So I think the move to get everybody on the wrong side of the market was here, as the euro was moving, straight down. That convinced everyone that the euro was going away, that Europe was collapsing, and I think it's gotten everybody on the wrong side of the market. And now I think the euro is in that slingshot move back up. So I think the pattern is correct, but I think the currency is wrong. I think the slingshot is going to be in the euro, not in the dollar. We've just printed trillions of dollars in QE over the last 8 years. There has to be a consequence to that, and I think we're about to get that consequence now as we enter another bear market in the dollar. So ultimately, I think this is what drives the next series of bubbles. We've clearly already starting a bubble in Bitcoin. You can see it in opinion. Nobody can find any fundamental reason for the for Bitcoin to go down. It's become a one-way trade. We're hearing outlandish price targets, 30,000 or higher. Price has rallied more than 100% in a year or less. I think it's more than 200% now. I've gone over that before. That is a sign that a bubble is in progress. When the public starts to come in, and I'm seeing a lot of public participation now in Bitcoin. There's our first bubble. I think it's being driven by what I think is a bear market starting in the dollar. I think the bubble will. I think we'll get a second bubble in stocks. I've gone over this many times before. That 15-year consolidation in the Nasdaq and breakout. I think I think 10,000 is going to be a piece of cake in the Nasdaq, especially as the what I think here is a bear market in the dollar really starts to accelerate. That should push all asset prices higher. Up to a point. Once we get to a point where the dollar really starts to unravel, then I think the bubble in the stock market will pop, and then I think the bubble will move over into the gold market as the bear market really starts to get out of control in the currencies, and I think it will. There has to be consequences to all of that QE. That's been done over the years, trillions and trillions of dollars. There's got to be currency consequences, and I think the consequences are starting here, and I think they're going to intensify once we break this yearly cycle low. So major occurrence, in my opinion, on Friday. We've signaled another failed daily cycle. The intermediate decline is not done yet. Still very early in the cycle. Odds are high that we're going to break this last support zone before this daily cycle is finished, and I would say the odds are high that this yearly cycle is not going to bottom until we get past the debt ceiling, and that's not going to be until mid-October.